Welcome to the Worldwise Wealth Podcast. I'm your host, Nicole, and this podcast is your guide to building a truly borderless life. From entrepreneurship, investment migration, tax optimization, and everything in between, this show highlights the nuances of a global citizen lifestyle. Let's dive in. Welcome back to the Worldwise Wealth Podcast. And in today's episode, I sit down with Whitney. Now, Whitney has been a real estate and more alternative investment investor for many years within the US. So in this conversation, we talk about how she started and scaled her traditional investing in real estate in single family homes to multifamily homes to investing in entire building blocks, and how she built investors and a team around her to continue to scale. We also talk about some more non-traditional investment types. So she does also invest for her investors in car washes, in storage units, and various other options within the US as well. So we dive into that business model and what that actually looks like for her owning and operating these specific businesses. Of course, we also dive into the lifestyle design aspect of entrepreneurship as well, and really looking at how she effectively plans her life out through her business and making time for her family in order to be a successful entrepreneur. So with that, let's dive into today's episode.
Yeah. Well, where I'm at today is I'm the director of investor education at passiveinvesting.com. And I also have my own real estate portfolio that kicks off quite a bit of passive as well as active income. My husband and I personally have over 800 million in active real estate in partnership. I wish I could tell you that I went to school for this, that, it's just as easy as getting a degree. But really, I started off as an accidental landlord back in 2002. I bought a house with a significant other, and the relationship fell apart a month later, and I had a house. And I thought the house was going to drain me financially. So I stuffed it full of roommates so I could afford the bills, kind of pawned everything off on them, completed the rehab on the property. And then about 11 months later, walked away with a $52,000 check. And when I was filing everything, all my tax returns and everything, that's when I realized that I hadn't been paying for anything for 11 months. Not only that, I'd been making money for 11 months because I'd been outsourcing all my housing liabilities, principal, interest, taxes, insurance, utilities, you name it, to my roommates. And then I had made this check that was almost as big as what I would make in a year in my day job. And I was like, wait a second. There's got to be something to this. It really was the first time in my life that I was able to unhook the value that I create in the world for how much time it took me to create that. And did several more live and flips and house hacks on my own. Some went well, some not so well. We can talk about any of those. I had one where a bus fell into the roof of the property, and that's a fun story. But then eventually transitioned into buy and hold real estate because I wanted to figure out how to get cash flow, money coming in every single month that I didn't have to trade 40 hours a week or 50 hours a week for to get or more. Um, and then, every few years I'd hit a ceiling of achievement and tried to figure out how to bust through. My next ceiling was, how do we go bigger, right? Because now we have 40 single family rentals, and that was mind numbing trying to work with all the property managers. And I was like, okay, if we can do 40 single family rentals, we can do a 52 unit apartment building. And so that was our next purchase. And then I was like, ooh, that was okay, but it would have been really cool to share the load with a bunch of partners. And so then got into general partnership, scaling a private equity firm. And we did 29 deals together, 10 of which I was the general partner on. And then just been kind of scaling from there. Where I'm at today with passiveinvesting.com, we focus on multifamily investing, self-storage investing, express car washes as our equity investments, but we also help our investors diversify across all the layers in the capital stack in senior debt positions, secondary debt positions, preferred equity, just so everybody can build the portfolio that they want that helps them meet their goals, their risks, their timeline, and really individually craft that.
What an interesting journey. Okay, there's a lot to dive into there. Thank you for sharing. So I think I want to start with touching on the scaling aspect and then how you started with the general partnership. And I believe you mentioned scaling with private equity. I think we hear these words and a lot of the time, like it's big, fancy words, but we don't really know what that actually looks like behind that.
Yeah, yeah. So, where do we want to start? The private equity piece, or like just scaling, going from fix and flips to single family rentals? Because I
Yeah,
think the
let's start with maybe like how you initially just started to scale and then getting into private equity.
Yeah, so I never saw myself in real estate full time because when I came out of school, I had gone to medical school part time, public health. My dream was to be, Renee Russo out of the movie Outbreak, like, starring alongside Dustin Hoffman on like some like fancy, disease outbreak in some unknown country, right? Like that was my dream. And so for me, it was really hard because, and I think a lot of people can identify with this, is that your identity gets wrapped up with what you went to school for, what you trained for. And so, yeah, you might get introduced to real estate and you realize that that's a powerful tool in your tool belt to start generate, a little bit of cash flow, a little bit of extra income, but to fully transition into it being your full-time gig, a lot of people have a hard time doing that. So it took me probably the better part of a decade to really, start understanding that if I wanted to create real wealth for my family, I had to reorganize how I fed my soul, but also where my identity was. And it wasn't me, building a health practice, right? Once I finally said, you know what, like if I'm going to unlock these golden handcuffs for myself, have true financial freedom, true location freedom, freedom of choice, freedom of time to spend with my child, and with my family and travel, I need to like rethink on how I earn my income. I need to let go of that day job, that trading time for money. And when I did that, that was the pivotal piece that allowed me to start scaling because now I'm not looking for ways to scale somebody else's business or somebody else's practice. I'm looking for ways to scale my own wealth, my own assets. And now here's the thing, you're going to always go further or faster with partners. So initially, I started the scaling on my own. And I was like, okay, I'm going to just acquire single family houses because I can do that on my own. I don't need anybody else. And then I was like, wait a second, if I want to actually get beyond just having a few $1 million to like tens of millions of dollars, I need to actually figure out how to leverage other people, their time, their knowledge, their expertise, other people's capital. So it was really just kind of like peeling back the layers of the onion. I wish there was just like a magic moment where somebody blessed me with like a wand touch on my fairy godmother, touched my head with a magic wand, and we're like, hey, like this is what scaling looks like. It's peeling back the layers of the onion and continuing to unhook my identity, but realizing if I'm going to step into building true wealth, I got to bring other people along with me in order to do that. So I first did it through single family homes, then I did it through multifamily buildings, and then I was like, I got to get in partnership with other people. Like, yeah, I can run a 52 unit building on my own. Not fun, but I can do it. But I can't. How am I going to have 10 of those, or 15, or 20 of those? It's because I got to have partners. Now, how I met my first set of partners is kind of a funny story. I went to a conference and I was probably one of 10 women, like no joke, at the conference. There's 400 or 500 guys, 10 women. So when in between speakers, there's a bathroom break. The men's line's like wrapped around the building. The women's line is the shortest line ever, which is never completely unheard of. Right. And I actually met two amazing women in the bathroom line at this conference. And so, just getting into conversation with them, understanding what their pain points and their problems were. And funny enough, they'd actually asked me, who do I know in my network that could be their executive assistant? And I was like, okay, cool. Like, let me take a look at the job description because I do operations, in public health, I can help you out with formulating the job description, making sure that you're getting the right person, in the seat that you need. And then when I took a look at the job description, I'm like, this isn't an executive assistant. This is an operator. Who do I know that's an operator? And then I'm like, wait a second, me. So, um, anyways, that's kind of the roundabout way. Sometimes it's just like having the vision, but also like just being in the right moment at the right time and allowing, the world to conspire for you.
Are you looking to become a diversified global citizen? If this is a lifestyle that you're seeking to create, we can help. Whether it be multiple residencies, citizenships, bank accounts, trusts, or company formations, we operate in 30 plus of the most tax friendly jurisdictions around the globe to get you structured properly. Head to the link in the show notes to learn more and to get your global citizen journey underway today. Wow, what a story. Thank you for sharing that. I mean, I think it is very interesting because when I speak to most successful entrepreneurs, they really just happen into various different areas of their business. And it sounds like that's really what happened with your partners. And then you saw that opportunity and continued to grow and scale that from there. Okay, so I I want to talk about a few different things, but I think I first want to talk about real estate in general because I'm going to use a personal example. So let's say 3 decades ago, the real estate market in Canada and the US and the West was very different. And I think for today's generation, not only is it difficult to get into the real estate market, but and I want to hear your opinion on this because I am not in the real estate market. That's not what we do here. But I don't foresee as much appreciation as generations past really saw. Like when I look at my parents, just single family homes appreciating by 500, 600%. And with the prices of, we're talking single family, but I'm curious your opinion if that is the way to go or really is not the way to go these days. I don't foresee that appreciation if we're talking in the West really being quite as high as I think previous generations have seen. And then we get into markets where we operate, which is in Latin America, and that's a completely different story there as well.
Yeah, well, and before we, touch on that question, because really it comes down to, quick answer there. It comes down to affordability, right? Housing prices can only go up so high. And then, without solving the affordability issue of the house being so high, right? It's usually the price is inflating because of devaluation of a dollar, not so much that the actual commodities that went into the house are that much more expensive. But I want to just put a pretty bow on something that you said is that you're just like, hey, listen, sometimes just things happen to people. People are putting themselves, if you listen to the stories, and it took me to realize to, a little bit to realize that, people are putting themselves in the path of progress. Had I not chosen to step out of my comfort zone and go to that conference, like, there's no way something would have like cool like that would have happened to me. Right. So if you're sitting here and you're investing in real estate or in your own business and you're just like, wow, how I can't do this. Like, first of all, change the script. How can you? Two, get near the people that can help you. And then just watch, sit back and watch what doors open for you. Now that, so shifting gears back to the affordability, or, appreciation of assets. Um, if we're talking about single family homes, I mean, I can speak for here in the United States. I mean, it's comparable analysis, right? The house that I own is only going to be worth what the person will, you know, that whoever sold their house, in the last 6 months. So right now I'm in Sedona, Arizona. The house we're staying at Airbnb. The house next door is for sale. It's been on the market for 4 or 5 months already, and they've had significant price decreases. Um, so the valuation of this current house hinges on what that guy sells his house for, right? It's a comparable analysis. When we get into multifamily real estate, it's a little bit different, right? Because I have a couple of different levers that I can pull there, which is how can I increase the NOI of the building, the net operating income? And so, same thing, maybe it's expected gross income in a business. or EBITDA. Like how can that will drive the valuation of a business. So in multifamily building, I can increase the income on the building and get paid more for it. I can decrease the expenses and get paid more for it. When I have single family rentals, nobody really cares if I increase the rents or decrease the expenses, right? Those things don't come into play, but they do on larger commercial assets. And then I can also add streams of income, and this, is formula works for multifamily, works for self-storage, even express car washes it works for, though that's more of a cash flowing business than it is actually a straight real estate play. So when somebody says there's no appreciation to be had, you might maybe, yeah, I mean, affordability is going to kind of, there's a ceiling there with residential real estate. It might be time to look at commercial real estate.
Interesting, very interesting opinion. And I've kind of felt the same, I guess, when we're looking at North American markets, just because there is really so much that you can get out of a single family home. And you're right, the price is dependent on various factors. Okay, interesting. So thank you for that. That was a little personal question that I was just been mulling over the last little while since my family is in
Well,
Canada and I am not.
yeah. Well, you can get, but that's just one way you get paid in real estate, right? You can get paid with capital preservation, right? Going, investing in an asset that, is going to hold relative value, right? And so then you can get paid with cash flow. Can you rent out the property, or can you put renters into your property, like rent it out by the room, or, divide it up into like, multiple units and then rent each one of those units for a little bit more than you could just if it were just a single family house. And then you get paid by the tax benefits too. So I'm not saying don't do single family rentals. It's just that, depending on your market, if it's already hugely appreciated and affordability is already an issue in that market, you know, you might not be able to take advantage of that wealth pillar. And the idea when we invest is that we want to take advantage of as many of the 7 wealth pillars as we possibly can. But it doesn't mean that you have to have all 7. Like if you have 5, that still could be a great investment.
Okay, so this is a perfect segue. What are these 7 wealth pillars?
Yeah. So, for me, I'm looking for assets that tap into all of these strengths. They preserve capital. So I'm investing in an asset where there's always going to be an innate value, right? So when you invest in, multifamily, single family, like the building is going to have some sort of value to it. The land will always have some sort of value to it. The odds of it going to zero are like slim to none. And like if I invest in Bitcoin or stocks, totally different game. Uh, so I don't understand Bitcoin. I don't pretend to understand it.
I
So,
love Bitcoin. I love it right now.
but then cash flow. Like I can actually create streams of cash flow with these type of assets. I can put a renter in it. I can rent a self-storage unit. I can, put a renter in a multifamily unit, a single family unit. I can create streams of cash flow, okay, that come in like regular clockwork, and they're contracted for a period of time, maybe a year, 6 months, maybe even just month to month. Maybe that's my business model. Um, 3, that I have a way of working some sort of appreciative value on the asset. Now, we always think appreciation in its true definition is the value of the asset kind of goes up and to the right. I don't know. We're not doing video here. So um, there's other ways to get appreciation or equity. And that is there's natural market equity growth, appreciation. There's forced equity growth. You get a property below value. Think of a single family home that needs everything new and you just replace all that stuff and now you can charge 20, 30K more when you flip it, right? You force the equity there. Or you can get natural pay down equity. So just by simply using bank leverage, renting it out to somebody else is now paying off that loan for you. You aren't paying off the loan. That person's paying off the loan and you get the equity growth. Okay. So that's 3 tax benefits. We love them, but I always consider tax benefits the icing on the cake. Please don't invest in any asset just because of the tax benefits. That's a great way to get stung hugely. I've seen a lot of people in the past 2 years get stung incredibly by investing only based on tax benefits. So those are our four core pillars, and then the other three are kind of like accelerators if you can get them. Smart use of leverage, all right? Good, making sure that you have a good loans on good properties, okay, and that the loans match the business plan. That right there got a lot of people in trouble in the past couple of years because they took floating rate debt and put it on a property that they were going to hold for 7 to 10 years, and now they're like in year 3 of their business plan, and they're scrambling right now to renegotiate that debt. um, Making sure that we're in good properties that are going to hedge inflation. That's why I love real estate. But that's not the only asset that hedges inflation. And then experienced operators is the last one, because if we're going to scale, there's only so much you can do yourself. Okay. So, even if you became a master in multifamily assets, does not mean that you now, if you want to diversify your portfolio into real estate debt or into self storage, that you should go do that. You should be partnering with other people who are masters in their areas. And so, learning how to invest with other operators, or at the end of the day, becoming the master yourself.
And I'm curious how many hard lessons you had to learn to gain those 7 pillars.
Well, honestly, there are a lot of hard lessons in there for sure. I would challenge that I kind of layered in an eighth one right now for people. It's not branded yet, but the eighth one is make sure that when you're crafting your portfolio, that you're investing across every single layer of the capital stack: debt, equity. Okay, at least those two buckets, but there's all sorts of flavors in there. Think of it like flavors of ice cream. You can have chocolate or vanilla, or you can start mixing the two together, and now you got multiple different, the world's your oyster, right? Like cookie dough ice cream. But we're because I coach a lot of investors in the last 2 years. People were like, okay, Whitney, I diversified across the operator. I diversified across the asset classes. So I'm in supposedly asset classes that are uncorrelated: multifamily, self storage, mobile home parks, residential assisted living. Um, and then invested across multiple markets. Okay. I am so diversified, it is crazy. And I'm like, but are all those assets equity assets? They were like, yeah. And I'm like, well, that's your problem if your portfolio is struggling, is because you were in, it's kind of like being in the stock market in all in high growth assets, equity assets, and then you have nothing diversified across anything else. No bonds. And which this is a bad stocks, bonds, bad bad example, but we used to believe that those two were uncorrelated. Now they're correlated again. But in the real estate world, true uncorrelation would be equity and debt.
Hmm, interesting. Okay. Um, I have it noted here because I want to talk to you about, you've mentioned a few different times various of the businesses that you have. And one of them is car washes, which I think is really interesting. And I actually just heard, do you know the public figure Cody Sanchez? She was just recently talking about how she invests in various different car washes as well. And it's so interesting. It's a very interesting business model, and it's, as she kind of phrased it, as like it's boring and it's just a money printer. And so I'm curious what car washing and that business and some of the other businesses that you hold as well, how you got into that, and then what that actually does look like from a business model perspective.
Yeah. So, at passiveinvesting.com, our bread and butter, core assets were in multifamily. And then, about 2000, like 18, 19, we started seeing kind of the writing on the wall with, assets having compressed cap rates, meaning we thought the valuation of the multifamily assets were pretty close to the top, right? You're going to have to start doing some pretty tricky lending to acquire a multifamily asset. And, if anything happened in the market, you're going to get stung. Okay. That's kind of the story that a lot of operators felt in the last couple of years. And so, But anyways, we're sitting there, we're risk adjusting our returns. And so, our year one cash flow for our multifamily assets went from 8% down to 7%, down to 6%, down to 4%. And our investors were like, just weren't having it. Their expectations were not adjusting. We're like, okay, well, we want better year one cash flow too. So what do we go to? Well, let's start looking at cash flowing businesses. And we looked at parking lots and laundromats and, you name it, a lot of different things. And we landed on express car washes because there's a unique opportunity that's happening right now, and it kind of harkens back to self storage 20 years ago. So, and it so when we talk about car washes, you can have like the coin operated, now credit card operated, like self-service car wash, or you could go to a car wash where there's an army of people that will wash your car or vacuum your car, right? One is very labor intensive, one is not scalable hardly at all. Okay. So, how do we get that scalable model? Like create essentially the fast food of car wash. That is, can't have an automated tunnel. So think of this, and I really like people to understand that we're very specifically in express car washes. So you drive on the property. If you've paid for in your recurring monthly membership for vacuuming, there'll be somebody there to vacuum out your car really fast. Or you could do it yourself if you don't want to pay for additionally in the membership fee. And then the car goes into the tunnel, which is probably 80 to 120 feet long, and it reads a barcode on the car. And then that, based on that barcode, the tunnel knows what kind of pre-wash, waxes, shines, undercarriage washes. It knows everything about the car. Do you get tire wax every time you come in? Do you get it every fourth time you come in? So we're layering on technology to service the customer quickly. And when you have a 120-foot long tunnel, you can now wash 400 to 500 cars a day with like just 2 to 3 full-time employees. And they're very efficient with water and electricity and chemicals. And so the wash in and of itself, all in, probably cost about $2.60. Okay. This is if you're hyper optimized. And that's labor, everything. The monthly recurring model is you're starting at $25. So there's a pretty healthy margin. And the natural question is, a lot of people go, well, how many times do people wash their cars? 1.8 times a month. Okay, so you're going to have your super users, of course, but then your average user, washes 1.8 times a month. So $5, and we're making at least 20, if not 30, 35, in that monthly recurring revenue model. So that is where it becomes boring, right? I don't think anybody like goes to school in second grade, and when they say, hey, what do you want to be, and they're like, I want to wash cars. Nobody says that. But if you're trying to figure out a way to leverage automation and expediency and deliver an amazing result for a customer, this is a great way to do it. Because at least Americans, we all need a roof over our head, everybody in the world, and Americans love their things. Okay. So they're going to, even they might have to downsize from a house to an apartment, but they're not going to get rid of their things. Okay. And they love their cars. So the kind of the natural next steps from investment away from, investing in the roof over your head for me was looking at where do people need to put their stuff? Okay. Death, dislocation, divorce, all that sort of stuff. And then like, how can we service their car? And quite frankly, in a recessionary environment, people can't afford to go get another car. So they have to take better care of the car that they have. So there's a lot of pressures on here that not only make it a boring investment, nice cash flow margins, really easy to operate and be kind of like an investor operator, but there's a lot of market pressures here that just, keep car washes, kind of in the prime. The last piece here is there are no third-party management companies. So mom and pops that started scaling their businesses, say like 5 or 10 years ago, they're tired. They want out. They thought if they just had 1 or 2 locations, they'd be able to hire an operator and they'd be, like, riding off into the sunset. And so we're able to kinda snatch up these mom and pop locations because we have built a third-party management company. And so we're scaling that from the ground up.
Thank you for explaining that. It's really interesting because to me, it really showcases the importance of being in a market to start something in that market. Because if you told me about that business model, I would probably, I mean, without like really diving into detail quite yet and really looking at the numbers, I would say like, who washes their car anymore? Like because I live in I haven't lived in the Western culture for almost a decade now. And so it really showcases to me the importance of being in the culture and really understanding what the people are wanting. Because I would have never thought that people are getting their car washed 1.8 times per month.
Oh, I mean, when I was traveling overseas, like in China and Southeast Asia, I mean, like, if you put this investment in front of me then, I would be like, "No way, you're crazy." Like, this would never fly. But yeah, you have to understand, what happens in not only just in the United States, but, you know, um, there's behaviors even more local than that. Like in the Southeast, like they don't think twice about water. Water is everywhere. And so they wash their cars more readily. I'm sitting here in Sedona, Arizona, and there's one coin operated car wash that I've seen in like the whole county, Yavapai County. I'm sure there's more guys. But it's because we're in the middle of the desert. Like nobody washes their car here.
Really interesting. So now talk to me a little bit about the storage unit. Is that kind of a similar aspect to car wash?
Yeah, so I would say, self-storage is a little bit more mature. Initially, about 20, 25 years ago, you had those same pressures. A lot of mom and pop owners. There was an opportunity for private equity groups like us to come in and consolidate purchases from mom and pop owners. And then out of the birth of those consolidation, third-party management companies came online. And so now you could buy anybody could buy a self-storage building, put it with a property manager. They didn't need to know how to manage the building. Like they could get expert management and pay for it. Um, so that opportunity still exists today. It's a little, like I said, it's a little bit more mature. We go in and we buy, self-storage buildings. We love looking for opportunities where there's like another, like say 5 to 10 acres available on the plot of land, so we can do what we call an expansion opportunity. So maybe add more self-storage units, or if it's an area, say like in Florida, a lot of boat RV rentals, because HOAs, housing associations, don't they want, the high-end customer in their houses, but they don't want the RV sitting in the front yard. So that person now has to go pay, a self-storage facility to store their RV or store their boat. So we look for opportunities like that to where we can expand and again, increase the net operating income of the property. But we're able to offset that or have those operated by a third party management company. We don't manage those ourselves. We do asset manage. So we stay in very close contact with our management company on a weekly basis to manage all of our assets.
Hmm. Interesting. And very interesting. It definitely gets the your mind's working of like, what are other interesting opportunities that are pretty self-sufficient on one end, but then also, maybe an untapped market. Are those opportunities that you're always looking for, or you're pretty happy with what you have?
No, from a business, that's what we do at passiveinvesting.com. We're always looking to scale our portfolio. We want to do it in a very conscious way. We want to add good assets to the portfolio that are going to, kick off the stable income that our investors expect, and also, that balanced blend of income appreciation, preserve capital, throw off some tax benefits. We're not in the game of development or opportunity zones. We're not looking to like make $10 million in 3 years, really fast. And that's our only wealth pillar we're tapping into. We're looking for a nice balanced blend of those core four pillars. So our our investors can actually rely on the returns that we promise to them. So, you know, with you know, with the portfolio though, we're able to help our investors diversify across multiple asset classes. And so, and to be really hands off. So you can do everything here. Like anyone listening to this could be like, hey, Whitney, teach me how to buy a multifamily building. Hey, Whitney, like, let's go buy an express car wash. Yes, you can do this on your own. Or if you have a higher and better use of your time with something else, with some other effort, especially if you're like living out of country and traveling the world right now, this isn't a unique opportunity to really leverage other people's, other partners' time, knowledge, and expertise. That way you can stay in your zone of genius.
Hmm. Yeah, very much so. And in a strong market as well. So I want to talk to you about your phrase, which is budgeting is dead. Talk to me a little bit about this.
Yeah, so that phrase comes from my book, Money for Tomorrow: How to Build and Protect Generational Wealth, recently published with Bigger Pockets. And it was interesting because, I hate the word budgeting. That's not what I want to do. I mean, I think when people are initially looking at their finances, budgeting is a skill that you kind of need to keep in the back of your head. But, for the more sophisticated investor, somebody who has a little bit higher in net worth, cash flow generally isn't a problem, right? They got cash flow coming in, but are they spending it in the areas that are really going to give them true happiness? And that's where and this can work for anybody in any situation. But I could take my investors through an exercise of how to align their spending, um, and at the same time capture some expense, recapture some of their expenses so they can now, take that, pot of money and go invest and create more income. And so, if you will indulge me for a little bit, I would love to take the listeners through it. And which is, if you're trying to figure out this whole thing, sit down and write out all those things that that make you happy. And I put them in three buckets. One, what are those experiences you want to have? And it can be just as simple as having, like, coffee with a friend, or it can be as luxurious as traveling the world. Whatever your float your boat, but think of things that are local, national, and international. Um, Things that don't cost that much and things that maybe cost a lot. Um, and then the next bucket, think of those things that would help you personally grow. It could be learning a language, taking a class, uh, learning how to cook. Like for me, my daughter and I are learning survival skills. We have been for like the past year. Um, how to build like a tent out of nothing or a shelter out of nothing, like just crazy stuff. But what would help you feel like you're growing personally? And it doesn't have to be necessarily related to your business or related to your job. These are just things that would make you happy. And then how do you want to give back? So think of all those things. It can be with your time, it could be with your knowledge, it could be with money. How do you want to give back to the world? Okay. Now, when you have these three buckets in place, now we're going to take a look at your credit card statement and all your bills. Do they align with those things that truly make you happy? All those experiences you want to have, the ways that you want to grow and connect with people, and the ways you want to give back to the world. Because if they don't, you might want to consider getting rid of that. I bet you could easily get rid of that expense, and it doesn't really like help you at all. A key point here for me, I I cannot stand shopping. I hate it. Like I can't. My family, like they want to take me, like, to go downtown here in Sedona and go Christmas shopping. I'm like, that sounds like the worst thing ever. But because it's not aligned with any of my values that I have and what makes me happy. Now, if they say, "Hey, let's go rent a utility vehicle like a Can-Am or something like that, a side by side, and let's go jeeping up a rocky road," I'm like, I will throw down hundreds of dollars on that. Yes, that sounds fun because adventure is one of my values. It's one of my experiences. Now, there's somebody else listening to this that is just thinks the exact opposite of me. They're like, no, I would never do that. But I would go shopping all day long with your daughter. Can I come take her? So um that's just a little flavor of what kind of like that budgeting is dead exercise is really trying to, it's not about not ever thinking about your finances, but creating alignment with how you spend money.
Yeah, I love that. Thank you for sharing that and going through that kind of thought exercise for the listeners. And I completely agree. I think one thing, I mean, there were lots of things that I have learned since being outside of the culture where I was born for so long is really what truly makes me happy. And, that can be spending time with family, but not living anywhere near them at the exact same time. Not for their reasons, for my own reasons and lifestyle purposes for myself. I think it really forces you to be introspective, both traveling, the entrepreneurial journey, like really just things that push you outside of your box that you have to make the conscious decision to do, but then eventually become a lifestyle as well.
Yeah, and I think for a lot of people, they tend to shed the chasing the Joneses, trying to keep up with the Joneses, with the next door neighbors, when they fully like land on, oh, that's what makes me happy. Um, for me, we're in the middle of Sedona, Arizona right now, and there's a lot of retirees. Everybody's talking about this huge party that's happening on Friday night here, and I'm like, my good friend of mine that's here right now, she was just like, let's go mountain biking. I'm like, that's what makes me happy. I have no interest. Right. So it's about creating that alignment and honoring yourself. And I encourage people, do this for yourself, do it with a partner if you have a partner, and then also do it with your kids. So I did this exercise with my partner and my husband, and it's crazy. Like, he wants to go to the Super Bowl, he wants to go to a baseball game at Fenway Park. There's all these things, and I'm like, I have no desire to do that, but we will create the space and put the savings aside so you can go do that. I want to go to the World Cup. I want to go to the LA Games, Olympic Games. So we're going to set the money aside for me to go do that. So we both get to fill our own cups, and then there'll be things that we want to do together as a family.
I love that. Thank you for sharing that. So, where can people find you online, Whitney?
Yeah. So if you're interested in investments and learning more about passive income and how we can help you at passiveinvesting.com, you can reach out to me at passiveinvestingwithwhitney.com. And if you're looking for more one-on-one help, getting your plan together so you can get to your first or next investment, you can reach me at ashwealth.com, ashwealth.com.
You've just listened to the Worldwise Wealth podcast. Visit our links in the show notes below or at worldwisecapital.com to learn more about how we can assist in your borderless diversification journey. Thank you for joining us, and we'll see you in the next episode.